Hello, Elite members. Thank you for joining us as we introduce Reconnaissance Energy Africa Limited. This is my first meeting with management members and the main founder, Craig Steinke, and of course we have Doug Allen on with us, which is the SVP for the company. Doug was kind enough to introduce us to the company just recently, just a few weeks ago, and I requested this meeting for further consideration. Doug, why don't we get off the ground here maybe and have you introduce Craig and yourself before we get into talking about the company.
Okay, thank you, Andrew. I am a recent officer in the company and joined because I was frankly dumbstruck by the opportunity here. Craig will tell your group more about that, Andrew, but this is, I think, arguably a very unique opportunity in the oil and gas sector. I joined in July as the Senior Vice President of Investor Relations, and that's part of the company's commitment to, as it were, institutionalize the share register. That's a process that has begun. As you know, Andrew, we had a capital raise that closed in August. It was twice upsized, and we had, for the first time, strong institutional participation in that capital raise. And so the journey to which we're committed of institutionalizing and making the share register broader and deeper has begun, and that will continue. And of course, this interview is part of that process. I'm pleased to introduce your listeners to Craig Steinke. Craig is the founder of Reconnaissance Energy Africa. I've known Craig for a number of years, and really the genesis of my involvement was a coffee in downtown Vancouver last summer, where Craig said, "Have I told you about Recon Africa?" And I said no, and what I thought was going to be a 15-minute conversation turned into an hour and a half, and me actively following and ultimately joining the company. I think it's an extraordinarily exciting investment story, and why don't I stop there and turn it over to Craig to share with your listeners how he came to found the company and some of the background, and then we can go through the slides as you deem appropriate, Andrew.
That sounds great. Craig, take it away.
Oh, okay. Thanks, Doug and Andrew. I just, I'll just make a rather bold statement, to the start at the start, and I'll proceed to back it up. But this is such an interesting opportunity, and it's unprecedented in my career in the oil and gas industry, where this back in 2013, this play, the Kavango Basin, has evolved from more of just a geological hunch to now in 2020, it's evolved into onshore, the most important high impact exploration play there is worldwide. And I know that's a pretty bold statement, but let me attempt to back it up. But let's start by going back to how this play evolved, and specifically, let me start with the people that are involved and how long we've been working together and what we've done in the past, just real briefly. But this goes right back to 2010. But Ian Telfer and I had a company called Realm, and we did a deal with Halliburton, specifically Scott Evans, one of the VPs in Halliburton in Houston, where we used the Halliburton people in Houston, which is unsurpassed, and to identify key plays over in Europe. And also a fellow by the name of Dan Jarvie, who is the former chief geochemist of EOG, and then also he was the key source rock expert in Mitchell Energy. So Dan Jarvie being a very accomplished geochemist or source rock expert. Anyway, that's how we all came together. After the sale of Realm 2011, what I did is I bought IHS Markit's first worldwide source rock study, and I hired 4 good international geologists and brought in Dan Jarvie, and we went around the world looking for interesting, prolific source rocks. And so, as you can imagine, going around the world looking for source rocks, that's quite a exhausting endeavor. But the short story is that led us to northeast Namibia in 2013, and we had a list of criteria. There was exactly 11 criteria that we had to meet above ground and 11 below ground, collectively 22. Namibia ticked almost all the boxes above ground. They've got some of the best fiscal terms in the world, a 5% royalty, which is pretty much unsurpassed, and a modern petroleum regime, a internationally accepted hydrocarbon law, low on the corruption scale, and it's partially, I think, attributed to the fact that it's a former German colony. I mean, the infrastructure in Namibia is surprisingly solid. So it ticked pretty well all the boxes above ground. Below ground, we didn't have a lot of data at that time. This is back in 2013. But importantly, what we did have is we had this well called the ST1 well, drilled by Atosha Petroleum in 1964. It was, albeit it was drilled in the more shallow part of the basin, where the basement floor was only 10,000 feet. But importantly, it drilled through 620 feet of Permian shale. So we knew we had a source rock, and basically just on a geological hunch, we felt that the basement floor got deeper as you go east towards Botswana. So then consequently, the basin got a lot deeper and thicker. So based on that, I just started leasing the lands with the Ministry of Energy in Windhoek, the capital of Namibia. But while I was at the ministry, the guys there, they said, "Hey, Craig, by the way, our government has flown a very tight grid, high resolution aeromagnetic survey, and nobody's ever acquired it. And consequently, nobody's ever interpreted it." And that, the aeromag survey is it's the best tool we have on identifying the depth to basement. So that's exactly what we were looking for. I acquired it immediately. And we knew that a fellow by the name of Bill Cathy, the CEO of Earthfields Technologies in Houston, is about the best guy in the business for that niche, that interpreting aeromag surveys. He does all of Chevron's worldwide aeromag or new basin work. Apparently they don't use anybody else. I mean, his client list is Exxon, Shell, Occidental, Conoco, etc. Very accomplished individual. So I gave him the data, and 6 weeks later, he comes back to me, and I know this is cliche, but he literally said, "Craig, are you sitting down for this?" And he said, "Look, we've interpreted the data. We've accurately mapped the basement floor under your lands, 6.3 million acres that I was acquiring at the time." And he said, "You guys have discovered a brand new sedimentary basin. This thing is 30,000 feet deep." And he said, I've been all over the world. I know every basin." He said, all basins 30,000 feet deep produce commercial levels of hydrocarbons. And so, as you can imagine, that was a real turning point here. That was in the evolution of this play. That was now in 2014, but oil was at about $110 a barrel the spring of 2014, and then it took a precipitous dive in the fall of 14 on its way to $26 a barrel. So I just put this on the shelf, paid the rentals every year, did the minimum amount of work program to keep the licenses in good order, and we're just waiting for better times. And so what we did is September 2019, we took Recon Africa public on the TSXV. It was an RTO transaction. We raised $3.4 million at 20 cents. And I think in a few months after that, in December, we raised 1.4 million at 34 cents. And then in the new year, 2020, January, February, we raised $3.4 million at 68 cents. So you can see the stock was very upwardly mobile at that time, getting the word out that we had acquired the interests over an entire sedimentary basin. And but what we did with that collective $8.4 million, Andrew, is last summer, the summer of 2019, I was talking to numerous drilling contractors, international drilling contractors, Neighbors, Precision, etc. Names that you'll recognize. And I soon realized that we could buy our own rig, drill the first 3 wells into the Kavango Basin to open up this basin, prove an active petroleum system, and own the rig for, at the end of the day, for about 40% of the cost that specifically Precision was quoting us to drill the first 3 wells. So the answer was pretty simple. We looked at about 9 rigs, and last late fall, winter, and we acquired in February 2020 the Crown 750. It's a 1,000 horsepower, very mobile rig. It can go down about 12,000 feet, and we acquired that for $1.8 million, and we're currently refurbishing the rig just for faster drilling speeds, allowing it to go a little deeper. And it's in Houston, Texas right now, and we plan to have it completely refurbed in October, on a ship late October, landed in Walvis Bay, Namibia, late November, and spud the first of the 3 wells of the initial drilling program, which comprises 3 wells. The first well will be spud in December. So that kind of brings us, it gives everybody an idea of how this has evolved. But now we have a collective 8.75 million acres, because with additional work that we did last spring with Bill Cathy, we're able to, again, through another aeromagnetic survey that extended into Botswana, we've picked up another 2.45 million acres in Botswana, collectively 8.75 million acres. So we now have the entire basin, and aerially, this is larger than the Eagle Ford. And one of the key differences is there's over 100 companies in the Eagle Ford that hold the petroleum and natural gas rights, and in the Kavango, one company, one little, $90–100 million market cap company owns all the rights to the Kavango Basin. So it's, as a consequence, this is developed into what we believe is it's the only undeveloped hydrocarbon basin in the world of this depth and size. And consequently, it's the highest impact exploration play in the world right now. So I know that's a pretty bold statement, but that's the way we see it. We're one of the very important components of Namibia is that the government is very proactive, very supportive of the oil and gas industry. They're determined to develop their hydrocarbon resources, and they convey world-class license contracts. And again, the royalties are 5% versus 25% in Texas. I mean, that makes each barrel of oil you pull out of the ground so much more valuable. The team that we put together, Andrew, I can genuinely say I believe this is the most effective, accomplished technical team I've ever worked with. These guys have had huge success in the past, and they're not here. They're here, of course. This is going to be financially very lucrative for them, but they're also here for just the opportunity to discover a new sedimentary basin. I mean, how often does that happen? How often does that happen for investors? Not very often, perhaps once in your life, but the same with technical people. I mean, this is a once in a lifetime opportunity to open up a new sedimentary basin. So a great team, which we'll elaborate on in a little bit, but and then very importantly, we when nobody else is raising any money in the oil and gas sector, specifically Canada, Recon Africa just raised $23 million. Last June, we announced a $6 to $10 million financing because we were a little, the whole thing was a little tenuous because nobody's been raising any money, and we blew through the $10 million cap and got exchange approval to take it up to 20. Went through 20, got exchange approval again for 22 million, and we closed August 20th on $23 million. So, I mean, that is why that's important, is that, well, you can see the response we got from investors because it's such an unusual opportunity. But also, very importantly, this finances the entire drilling program, and actually it gives us enough money to commence and pay for a 400-kilometer seismic program. So we're fully funded to open up this basin now. So very, very important. Anyway, some of the key statistics here on this slide. We now have 105 million shares outstanding, about $21 million in the treasury. And, our price has been very, very robust lately. We're now at, $1.18 a share. And, we've got the cash, we've got no debt. Insiders own 20% of the company, so a healthy share. And, on this slide here, it's such a searing point. Bill Cathy, again, a new basin expert in the industry, his point is nowhere in the world is there a sedimentary basin this deep that does not produce commercial hydrocarbons. Very important, very searing point.
First, let's go back for a moment. Talk about the oil market for a moment. And obviously, this type of play is not. In some ways, it's the same, but other ways it's not. I would hope from a cost profile that it's not the same as what folks are doing in Canada. It's not the same as what folks are doing in the U.S. Speak to just generally with what you've seen in this region with other companies' success and so forth. Can you talk about first the broad oil market, where you see we're headed with price? And there are fears, of course, with price staying in the 30-40 range. What's your thoughts on that, and how does that affect any potential discovery and the cost profile that you guys might be looking at?
Well, let me just deal with the cost profile and the the economics of the play. I'll just touch on that. I think what's important to realize is that we're not concerned about what oil is today. We're more concerned when we start producing in say 2022, we believe, what oil is there. So we're watching the strip more than the spot. And the strip is, it's about $50 a barrel. But going back to to answer your question, Andrew, on the more macro look at the industry, I've been in the industry all my life, and it's a very, very cyclical industry. But I think that, like, JP Morgan put out a report on the future price of oil early March, and I read the report, and it's, there's always reports out there, but JP Morgan, they typically do a pretty good job. And I agreed with a lot of their forecasts and assumptions because, due to GSE issues, et cetera, exploration, the industry, there's been a dearth of exploration in the industry for quite some time. And I've felt that we're going to hit the wall at some point. And that was JP Morgan's point. They were calling for, I think in 2023, $110 a barrel and $190 in 24, something like that. Even if they're in the ballpark, oil's going up. But then along comes COVID-19. And as a result of the price of oil going negative, there's been the guys that I know in the industry, especially in the US, all they're doing is shutting in oil wells and going bankrupt. Anyway, there's millions of barrels a day that are not going to come back on. And once demand normalizes, whenever that is, that's anybody's guess. But once it normalizes, there is going to be we're going to hit the wall on the supply side. And as a consequence, I am an extreme oil bull over the next couple of years. And that coincides perfectly with when Recon Africa envisions bringing on production in the Kavango.
Okay. And let's talk just a little bit, Craig, just for a moment. I want to talk a little bit more capital structure for just a sec before we move on here. First of all, the cash that's been raised, where do you guys see that landing you as far as total capital to be able to sustain the company out? Is that something that'll get us into next year? What's the thought on how much runway you have with the cash?
We've got 21 million. We've got enough to execute our drilling program and the seismic program. So that's very important. But the way we structured the financing, Andrew, is that we included a full 5-year warrant on the financing. and which is trading on the market right now under RECO.WT. But it's the strike price is $1 a share, but there's a forced conversion feature on it at $3 per share. So should it trade for 20 consecutive days over $3, then the warrant holders is forced to convert into shares, and that puts $34 million into the treasury. And I, excuse me, I believe that there's a very good chance that while we're drilling the Kavango Basin in December, that the stock is going to be in excess of $3 because it's the upside is like nothing any of us have ever seen in the industry. And so I think a $3+ valuation is in order, and that will put another $34 million in the treasury. And I'll touch on the importance of that when we talk about joint venture partners.
Okay, and so with that, so let's just assume there, if that was the case, the market cap of the company would be somewhere north of 300 million, just rough math, and correct me if I'm wrong. And we're at today about 120 million roughly Canadian is the market cap. So with the drilling program, just I guess, well, let's get to that in a sec, Craig. Let me stay on capital structure here.
Mm-hmm.
Okay, so you're obviously you're the founder, you're the largest shareholder from what I've seen. Can you speak to where you are as far as your share percentage today, your cost basis for those shares, if you wouldn't mind sharing for our members, and then where are we at in terms of the other major shareholders at this point?
Well, you've got, I put the play together, and my cost structure is, I don't even know what it is. I went around the world with, looking for source rocks, with a bunch of high-priced technical people. That adds up over a while, and after a while, and then I carried the property for 7 years. So I don't know exactly what my cost structure is, but it's way over $1 million. And but I am the largest shareholder. We've got some very important key shareholders. Dan Jarvie, which I've touched on earlier, he's he's a major shareholder of the company. We've got some of Bill Cathy has, interestingly, Bill Cathy, the CEO of Earthfields Technologies, he has invested twice in this company. And remember, he's the guy who did the Aeromag survey interpretation, but he's invested at 2 tranches in the company. But they had Earthfields Technologies has a corporate policy, I think still do, where they don't invest in client plays. But when Bill got involved in the Kavango and interpreted it, and we took the company public, he asked his partners, apparently, according to Bill, to relax the policy so he could personally invest in the Kavango. So, just another key technical guy. All of our technical guys have invested in this play. Does that help answer your question?
Yeah, I think so. Just further on to that. Now, I was looking through the various filings here, and maybe you can fill us in on some of the other shareholders that I came across, and maybe update on where they're at. And it looks like with the capital raises at 68, 70 cents. And so forth, that most folks who's participating in those raises is probably somewhere in the neighborhood of, I'm going to say between the 50 and 70 cent range as their cost basis for the shares. But what do you have, and maybe you can confirm that roughly, David Elliott, Tectonic Fund, and Nancy Burke, are they also major shareholders at this point?
Yeah. David Elliott is one of the founders of Haywood Securities in Vancouver, a very successful resource brokerage house. And I've been working with David for decades. And so he came in on the private stage and has been a real supporter of the Kavango Basin. And then Ian Telfer, who that goes back to our Realm days. Ian is the former chairman and founder of Gold Corp. And Ian is he's a major shareholder under his wife's name, Nancy Burke.
Ian is still over at Renaissance Oil, and you still remain the CEO over at Renaissance Oil, correct?
Exactly.
Okay, so your involvement with Renaissance Africa as the major founder, are you going to take any position on the management team at this point, Craig, or are you going to be kind of in the background?
Yeah, I'm in the background. I'm helping the company out where I can, and I just I don't have any vision of being part of the management right now. I have my company has a kind of a corporate development contract with Recon Africa, and it seems to be working quite well.
Okay, and let's just cover real quick. So compensation for the new management team. Can you guys just speak to where you guys expect to be? I didn't see a lot of information on this, but where do you guys expect to be as far as total G&A costs, as far as compensation and promotion, et cetera?
Well, we just everybody was working on a pretty we had a pretty skinny budget until we raised some money. And now there's, we're entering into, now that we've raised some capital, I mean, we've got to pay the guys, a decent rate. And frankly, Doug, I don't even know, that's all coming together right now. It's being discussed by the board, et cetera. We don't have an accurate number, but we can get back to you on that.
And I didn't anticipate you would ask it. It's a fair question to ask, but I'm gonna say the G&A will be under $1 million on a run rate basis, Andrew. But that's a semi-informed estimate. It's not an accurate number. I can get you that number, Andrew, if you'd like. But to Craig's point, it's not something I've looked at either, Craig.
Yeah, well, it's being discussed by the board right now, so it's a little preliminary, but we've got to start paying the guys a little better. But we're running a lean operation. I can tell you for what we're doing in international operation, we don't have a lot of people involved. I mean, it's just we've dwelt on quality versus quantity.
Right. No, that kind of lines up with what I looked at, Craig, initially when I was looking at the filings. Is there's not a lot there, and not a lot has been paid, so it's appears to be very respectable in that fashion for a company that has yet to actually make a discovery. It looks very, very promising.
Just if I can interrupt, Andrew, to fill in a little bit. I mean, we have, in terms of running the operations and staffing the operations, we have a technical team that Craig alluded to that is, as Craig said, the best he's ever seen and worked with. A lot of the technical team members are compensated by way of stock options, which is, I think, in shareholders' best interest. We have an entity called Pioneer Oil and Gas, who is our facilitator on the ground in Namibia. They're based in Windhoek. Tremendous expertise and operational skills in Namibia, and they provide us with feet on the ground in Namibia at a very affordable cost for the execution of what we're doing there, Andrew. And so that allows us to advance a very globally relevant exploration program with not many people, and I think that is part of the secret to keeping the G&A at a reasonable level.
Yes, yeah, certainly, and there's a lot of names. I saw a lot of the gentlemen, Halliburton. You've got Mitchell Energy guys that were there, BP, EOG, a lot of different folks involved, and it looks like a fantastic roster of good technical folks. Craig, so on Namibia, we know Namibia really well from a uranium standpoint and a gold mining standpoint. They've got good infrastructure capabilities on that side of things. Can you just speak to, and we see the license area there on the map, can you speak to the logistics path in Namibia as far as getting oil to the market? Can you just talk about the process from getting material from the field through to, because there's not much onshore from my understanding. So can you kind of just talk about that? But Namibia, I'm completely sold. Fantastic jurisdiction. Botswana, a really good jurisdiction as well.
Well, we've got another map that really speaks
page
to
17, Andrew, would be a relevant page for your listeners.
But you're right, Andrew, and I'm glad you've had a good experience and a good experience in Namibia, because that's our experience. You think this, like, African country, and it's most people, including myself, takes a while to even learn how to pronounce Namibia, and let alone having been there. But I mean, Namibia is, and again, I think it's a lot of it has to do with being a former German colony. Not all of it, but it's got those German roots, and where they like their infrastructure. But you can see, you fly into Windhoek in the capital, or Walvis Bay, the city on the port, or the port of Walvis Bay. You can take that brown road is paved highway. You can see a picture of it on this slide. Paved highway all the way up to and through our property. And then from the north side, you drop down onto these gravel roads that you can see in the kind of center right. I mean, that's a gravel road. I mean, I can tell you those gravel roads are better than I grew up on, the gravel roads I grew up on in southern Alberta, Canada. And again, the infrastructure is surprisingly solid. But when we, importantly, this is a 5% royalty. When we start producing oil, that 5% royalty, I mean, it's versus say 25% in Texas. I mean, that makes each barrel so much more valuable, and this whole play so much more economic. And our goal is to truck the oil down that paved highway to a city called Grootfontein that you can see on the map. And then that's the railhead. We're just going to rail our oil right down to Walvis Bay, where there's oil storage, and that's where Exxon and the other players, based on success offshore, that's where they're going to put their oil before it becomes seaborne. But here's another very important point about Namibia. Now that we're on this map, you can see our leasehold in green, 6.3 million acres in Namibia and 2.45 million acres in Botswana, collectively 8.75 million. But a very key point here is that the government owns the surface rights and the mineral rights, of course, but they own the surface rights as well, which is extremely important, because that means we're not dealing with 300 plus ranchers that maybe don't want us there. I mean, you look at the picture on the center right where that gravel road is, you can see this is just this Kalahari desert and, kind of scrub brush. I mean, it's not beautiful, ranching country. It's not prolific ranching country. And the government owns the surface rights. So that allows us to lay pipe with ease. It allows us to operate with much more ease. And here's an example of how the surface rights issues are, how it facilitates our operation. We did the environmental impact assessment on the 6.3 million acres in Namibia in 6 months. I've never seen it happen that fast. But the local communities are very supportive. We're not, again, there's just grazing licenses on these lands. There's not crops, et cetera. So we're not disturbing, the local population very much at all. So anyway, that's just a huge part of the economics of this play on top of that 5% royalty.
Andrew, if I can pick up on a thread there that Craig has alluded to. Earlier in the conversation, Craig alluded to the future partnering aspirations that we have. The goal of the 3-well program is to establish the presence of an active petroleum system. And we believe that for your listeners, if in fact we succeed in that goal as we plan to, then the upside and the optionality here is frankly the stuff of legends. The fact that as you can see on this slide 17, that the majors have already vetted Namibia, and they're already investing in Namibia in a significant way. ExxonMobil, about a year ago now, licensed another 7 million acres offshore. There will be wells spud in the fourth quarter this year, I believe, by both Total and by Shell. And so the majors have already vetted the country, and they're investing significant dollars in the country. In terms of our future farm in or farm out discussions, that is a significant positive. But the point that Craig just made about the surface title being the domain of the government is another significant positive, Andrew, for those future farm-in discussions, because one of the reasons the majors like the offshore is they don't have to wrestle with the issues of land tenure. They don't have to deal with the issue of surface access. And the fact that the government owns the surface title in this part of Namibia is another significant positive in terms of our future farm-in discussions, because again, the would-be partners don't have surface title issues to wrestle with in negotiating a farm-in arrangement with us.
Very well. No, Doug, I appreciate that. And Craig, come back for a moment and just talk about, we've got majors offshore here, but talk about what they've done onshore and talk about the potential, because my understanding is, and maybe you know it better than we do, has there been anything done?
Well, the majors are offshore, and as Doug says, they like to be offshore because they don't have all these, the surface issues to deal with. So the majors haven't been onshore in Namibia. Basically, Namibia is a new, like petroleum regime. I won't go into all the details, but they were caught up in the War of Independence from '66 to 1990, and then they tried to get their put a good petroleum regime together, and of course the government had to do aeromagnetic surveys and seismic, et cetera, to provide industry with some data, and all that takes time, and they didn't really get their their fiscal terms right until the last 10 years, and then price of oil took a couple dives, and so anyway, it's evolving. But the majors currently are offshore; they're not onshore. But I think once we open up this basin, this is a majors size play, and you can see, as Doug has suggested, you've got the super majors offshore. They like Namibia geologically. They like the government, very supportive government, and the fiscal terms are some of the best in the world. So I think when we open up this basin and have modern logs and core, which we're only months away from that, it's our goal to run a process on further developing this the basin, and run a process, I mean, by inviting joint venture partners. And you can see on the map here what built-in partners we already have. I think Exxon, Shell, and Total, all three of them are going to be interested in this play. Why wouldn't they be? And I think we're going to have be able to run a very, very active process to get to get key partners. I think we can bring in more than one. But very importantly, back to our strategy on dilution or lack of dilution, I think that once we get these warrants exercised while we're drilling, if that's the case, that's going to put $34 million in the treasury that's unallocated. And so that'll position us then with modern logs and core, money in the treasury to sit down and cut I think a very strategic partnership with partners to help us develop this basin. But we're negotiating from a position of strength. We've got the data and we've got the capital.
Very well. No, I appreciate that, Craig. And let's talk about the program, and point me back to whatever slide you want to go to, Doug. But Craig, let's talk about this initial program that's planned for the last quarter of this year. Well, what's the plan?
Well, let's go back to the Aeromag survey, Doug.
Slide number 10.
Or Andrew, sorry. Yeah, right there. This is the Bill Cathy's interpretation with the Aeromag survey, and you can. So what's happening here is the blue, the dark blue are the depicenters. Those are the deepest part of the basin, and again, those are the 30,000 foot areas in this basin, and that's going to be where the source rock is going to be the thickest and most prolific. And then you can see the lighter colors and the containers, the traps, etc. So these wells are designed initially. The first well is designed to largely to test the source rock. Let's start with the source rock, and we believe this is going to be predominantly Permian age source rock, which is one of the most prolific ages for hosting, aged rock for hosting hydrocarbons in the world. The second well is going to be largely to test the thickness of the source rock. So it's not going to be a hybrid. It's designed to go as deep as we can in through that source rock. The third well is more designed to, it's coming along the shoulder of that structure on the right-hand side, number 3.
Okay, excellent. And what do you want to look at next year, Craig, as far as plans and timing as far as getting this stuff done and news out to the market?
Well, again, we're on track for a December spud with our own rig and fully funded, so there's nothing stopping us. And these wells will take about 35 days to drill. We can get through them pretty quick. They're only like 12,000 feet plus, and we'll be conveying good solid information to the market in Q1. And so we're just months away from opening up this basin.
Okay, and for the audience who maybe isn't aware of the different Africa plays and so forth, can you talk about what you guys see out there as a suitable cost profile? What do you expect as far as maybe you can draw some comparisons to the U.S. potentially there, but looking at other regional plays in Southern Africa, what do you see there as really kind of a goal as far as what you guys are looking for as far as cost?
Well, I'd like to bring it the cost structure, compare it to Texas. Like Texas, you go in and you've got to buy your acreage. Let's say you pay whatever, depending on how involved the play is, but you're paying 500 to well over to thousands of dollars per acre. So that's your upfront cost, and you typically have drilling commitments on these lands as well. And so this really relates to your finding and development costs. And then of course you've got typically a 25% royalty. So now you come to Namibia, sure, you don't have the access to the services that you do in Texas, but we still have good access to services here, by the way. But we don't pay any money for the land, and it's all on a work commitment. And by the way, this drilling program will surpass our work commitment in the exploration phase on Namibia. And again, the fact that you've got a 5% royalty versus 25%, I mean, this makes this play economic at today's prices. And we believe that we're just fine tuning our economics right now, but we believe $30-$35 a barrel.
Okay, and take us to what you guys are going for in terms of size here, Craig. Talk about size, and yeah, maybe you can point me to a slide you want to look at.
Well, yeah, thank you. And this is where it gets interesting. Let's go to the Jarvie, Dan Jarvie's geochemical analysis.
Slide 14, please, Andrew.
Okay, now, thank you. Now, I've worked with Dan Jarvie for 11 years now. And my experience with Dan, I mean, he is one of there's only a handful of guys like Dan Jarvie in the world, who can accurately assess the potential, hydrocarbon generation in a new basin. And Dan is, all the time that I've worked with him, he's been very, very accurate. And so last spring, we were able to compile a whole bunch of new data on the Kavango Basin. And the short story is, just 2 months ago, I gave it to Dan. I said, Dan, give us your best guess as to how much oil is generated in the Kavango Basin. So Dan, went to work on it, and this is what he's come up with. I mean, generally, he believes that the Kavango Basin, so Botswana and Namibia, has generated over 100 billion barrels of oil. And obviously what's key here is that one company owns the entire sedimentary basin. That if Dan is in the ballpark, somewhere around 100 billion barrels of oil, I mean, it goes back to my point. This is the highest impact exploration play in the world right now, certainly onshore. And Dan makes it, I love his quote, up top here, he says, given the nature of the basin and the tremendous thickness, this is pretty much a no-brainer. It will be productive, and I'm expecting high-quality oil. I think that says it all right there.
If I can, to expand on that, Andrew, for your listeners' benefit, I mean, back to your question about economics, again, our numbers are a work in progress and are not yet finalized, but we believe, given the availability of the infrastructure that Craig spoke about earlier, we believe that the transportation cost should be circa $5 a barrel. We believe that the drilling and completion cost should be circa another $5 a barrel. And so we think that, as Craig said, the economics of the conventional work below the current strip price. And we think oil in the ground, Andrew, is worth in the vicinity of $10 a barrel on a PV basis. And so if you look at these Dan Jarvie numbers and you assume a reasonable recovery factor, call it 10% recovery, which would be something in the mid-teens for conventional, which is very typical and very average for worldwide basins. So if you get a blended 10% recovery factor on 100 billion barrels, Andrew, that's pretty easy math. That's 10 billion barrels of opportunity that we are looking to basically unearth with the drill bit. At $10 a barrel in the ground, that's $100 billion. And so that's why we believe this is, the stuff of legends, potentially.
Okay, and Craig, talk to us just about, what you guys are, how much of this is going to be delineated with this current field program that's coming up. What's the thoughts on where that might go as far as, proving up to the market what's potentially going to happen?
Yeah, of course, if Dan's in the ballpark here, and I have every reason to believe that, that he is, 100 billion barrels in the basin, that's what's been generated. And of course, as Doug says, a fraction of that is recoverable, but even at 10%, I mean, half of these barrels, like typically your source rock will, it'll generate oil and expel about half of the oil that it generated. So Dan's right, 100 billion barrels, but as Doug has suggested, the conventional recovery on conventional, I mean, that can be up over 60%. So if I think 10% is very light recovery rate. But and by the way, Dan is only using, as conveyed here in this slide, he's only using 12% of the lands as productive. And, he thinks that is very, very conservative, and so do I. But anyway, so I think, the numbers aren't, we're being conservative in our numbers. They're so big because we own the whole basin. It's hard for people to get their head around. Now, this is going to take a long time to develop, like any new basin, to bring these into the reserve category. But so what we're doing is, so let's be realistic here. But, one company owns the entire asset, which is what's, where you get the high impact. And then number one, what we're going to do with this initial drilling program, to come back to your question, Andrew, is we're going to prove an active petroleum system, which we believe largely is in the Permian. Jarvie's, his point is going to be other source rocks, Jurassic, et cetera, but we think the thickest petroleum system here will be in the Permian age. And that's our goal, is to prove an active petroleum system. Once we do that, this is going to be unprecedented in the industry. One company holding, an entire basin areally larger than the Eagle Ford that has the data and has proven an active petroleum system. Now, after that, we're going to be very dedicated to shooting seismic, and then we're going to follow it up again with our own rig and drill more wells. But at that point, we believe it's going to be other people's money. And we're going to keep that 170 million, assuming all the warrants are exercised, we're going to keep that capital structure in place. So not a lot of shares outstanding, and let the strength of the joint ventures drive shareholder value for Recon Africa.
Excellent. No, sounds good, Craig. And expand a little bit on the kind of the outcomes here with this current field program. Talk about, if expectations aren't necessarily met with what you guys are leaning towards, or expectations are met or exceeded, what's kind of the two pathways based on those two outcomes?
Well, if we're going to drill down through, so let's deal with what I understand the question to be is, what if we don't get what we anticipate? We know that in the shallow part of the basin, the ST1 well is, there's a source rock there. Maybe we should just go back to that slide, that cross section.
Yeah, I was going to say, Andrew, let's scroll back to slide number 11, please.
Yeah, right there. So this is just it's like a cut through the cake, a cross section. And you can see on the left-hand side is the ST1 well that we discussed earlier that was drilled by Tosha Petroleum in '64. Okay, it drilled through 620 feet of Permian shales. The basement floor was only 10,000 feet deep. But as you go to the east towards Botswana, you can see that the basement floor gets much deeper, and consequently, the Permian shales naturally get a lot thicker. And if we use other prolific Permian basins as an example, it's typically 5 to 10-fold thicker. So we expect up to 6,000 feet of Permian petroleum system. The bottom of that would be the source rock, and the top of that would be the conventional structures. So we don't see a lot of risk in drilling down into a Permian petroleum system. Now the ST1 well is the shales. We had good TOCs, et cetera, but the shales are immature there, and so it wasn't hot enough. But as you get down into the deep part of the basin, and this is why it goes back to Bill Cathy's point that every basin in the world of this depth, 30,000 feet deep, produces commercial levels of hydrocarbon. And the simple point there is that because there's so much fill, and the basin is so much fill of sedimentary rock, and the basin is so deep that always, every basin of this depth in the world, somewhere in that thick package of sedimentary rock, you will find the right combination of heat and pressure to cook the organic material in the shales to produce liquid hydrocarbons. It happens in every basin of this depth in the world. So why would this be different? So back to your point, Andrew, we don't see a lot of risk in drilling through some prolific shales.
Excellent. Craig, so how about Botswana real quick? I know Botswana is probably secondary at this point. Is that just for future use, depending on what happens in the Namibian licenses?
Well, whatever we drill up.
Scroll to slide 15, please.
Yeah, okay, that's a good one. Thanks, Doug. You can see that the lands in Botswana are pretty much, they're just the same lands. The basement floor is as deep. You got the blue epicenters where the shales are going to be thicker. Botswana is just as prolific or opportune as the Namibian lands. So we drill these first 3 wells, albeit in Namibia, it's going to reflect very, very positively on the Botswana lands. And we're going to be very shortly, we're going to be commencing the environmental impact assessment in Botswana and setting up drilling locations for Botswana so we can continue drilling there as well. And we'll just, delineate the entire sedimentary basin.
Okay. Andrew, if I can pick up on a thread there, one of the subtleties for your listening audience that's important in terms of our preparedness to be as open as Craig is being is we don't have to protect proprietary information because we own the entire basin. We're not worried about an upcoming land sale, and so we're not trying to sit on proprietary knowledge. By virtue of having the significance of the Botswana license is it gives us the entire basin, and the significance of that cannot be overemphasized.
Yeah, exactly. That's a good point, Doug. Thanks for bringing that up, because candidly, never in my career have I ever been able to be so open about data, in the infancy or embryonic stage of a play. I mean, normally it's tight hole status all the way around, but because we own the basin, we don't have to be, we can be more liberal in the data that we're conveying.
Well, gentlemen, we've got maybe another 15 minutes. I want to be respectful of your time here. I appreciate you guys taking the time. Craig, on strategy, and Doug, on strategy for the company. My suspicion is management wants to delineate a good discovery and potentially sell off to a major, or if needed, become a producer. What's your guys' thoughts on that time frame and what your goal is from a strategy standpoint?
Well, we're asked that question, of course, quite a bit, because that's it's a big question. The time frame, again, we think that the 3 wells will open up this basin and prove up an active petroleum system. At the same time as we spud the first well in December, we're going to be kicking off a 400-kilometer 2D seismic program to better delineate these conventional traps that you can see in light green. We believe that because there's been a lot of faulting here, there's going to be some huge conventional traps that are going to, contain hydrocarbons. So we want to go after those first. So that's going to be really valuable information when we're partnering up and cutting a commercial deal. So we're going to be working hard on that in Q1, Q2, 2021. Will we sell out? I think that you don't know. I mean, but we're going to run a very active process on this. I think Namibia is internationally is one of the places to be, and when we've got the data, I think we're going to get a lot of interest in running a process, a lot of partner interest. And I view, we've got so many options, and we could farm the whole thing out to one partner. We could sell the entire company. That's a possibility. Personally, I think it's too early. I think there's a lot of value here yet to be realized before we sell the company. So I think partnering is the way to go, and I think partnering with numerous partners is the way to go. Will we keep some lands 100%, partner off some others? That makes a lot of sense to me as well. But I think because we own so much land, we've got a lot of options here, Andrew. So it's a little early to really answer that question definitively.
Andrew, to augment that, if I may, it's worth reminding you that Scott Evans, the CEO, is 10 years ExxonMobil, 25 years Halliburton. And at Halliburton, he was the vice president responsible for the division called the Integrated Asset Division. And that was essentially the in-house E&P company. Scott has a wealth of experience developing new fields. He has a wealth of experience in Africa. And so Scott is intentionally building a team that has hands-on operating experience. And so to your question, and to Craig's answer, we have a lot of options, which includes, we think, the possibility of more than one farm out, because the aerial extent of the land package is so extensive that we think if we establish the active petroleum system that we believe we're going to, we believe we will have more than one farm out partner very interested in talking to us. And we think the land package is sufficiently large to support more than one farm out arrangement. But we think it also could easily support that we keep some select lands internally for early monetization in the 2022 timeframe that Craig alluded to earlier.
Yes, lots of optionality and lots of potential here, guys.
Exactly.
Craig,
we like the word optionality very much.
Craig, we've not had a really good success over here. Not a very pleasant experience with past oil exploration plays. What do you say to our members about ensuring success of these assets translating into shareholder value?
Well, I think that just to summarize my point here, I think we know we've got a source rock, and we know that geologically, I mean, we're very, very confident that It extends, into the deeper part of the basin. I mean, why wouldn't it? And so the initial goal of opening up the basin by way of proving up an active petroleum system, I don't see a lot of risk there, and neither do any of us. I mean, Dan Jarvie, he's a source rock expert. He said, look, this is a no-brainer. He put that in print. He expects this to be productive, and we're going to hit light oil, I should say. But just proving up an active petroleum system is going to change the nature of this company from a market cap standpoint, et cetera, et cetera. When we start, then our goal is to prove commerciality. But that's where we're going to run into some challenges. I mean, this is, I view us, we're drilling into a big toy box here, and there's going to be numerous conventional play types, traps, ages of rock, et cetera, et cetera. I mean, this is a 30,000 foot sedimentary basin. There's going to be a series of challenges, just like any other oil and gas play. Like, we're just in the embryo stage here. But proving up an active petroleum system, just that alone, which we're very confident we're going to do, there's huge upside from here to there, from a shareholder standpoint, is the point. And again, we're going to use other people's money as our goal and keep our capital structure intact. We use other people's money for, I think, the more riskier part of developing this basin.
Very well, Craig, and just speak to that for a moment. The potential challenges you see ahead for the company, and any potential downside that you can think of here.
Well, the only thing that's really challenging us right now, Andrew, is this darn COVID-19, and it's playing with our, with our schedule. Like, I like to stick to schedules, and I like things to be on time. I like to deliver on schedules, and so that's very, very important to us. And the COVID-19 is a risk. It's playing with our schedule. We think we've got it managed now. We think that we are going to spud this well the first of 3 wells in December. But COVID, we get another wave. That kind of, the trades lay their tools down again, and so that's one of our risks. That's something that bothers me. But all it'll translate into is a delay in our program. I mean, we've got the play wrapped up under a long-term license contract. We've got the rig, we're funded, we've got the team. There's really nothing stopping us except for the virus and how it plays with our schedule.
Yeah, and I would just add, certainly you've got those challenges aside from the normal challenges, but it looks to be a really interesting set of potentials here, and appreciate you guys chatting about that. And one more thing, Doug and Craig, just before we wrap up here, the stock has ran from, I guess, the upper 50s or 60 area up to around, I don't know where it is today, but around $115 or so. Can you guys just speak to that? Is it a rounding error at this point? Obviously, other people are catching on to the story as well. What's your thoughts?
Doug, you want to?
Yeah, listen, we had a temporary dislocation after the 70-cent unit offering closed, Andrew, with clearly some of the buyers of the units were selling the common shares to keep the warrant, and strip the warrant is the nomenclature. We knew at the time that would be a possibility, but we also knew that it would be a transitional phase. And that transitional phase has clearly come and gone. Those that were going to sell the shares to hold the warrants have clearly done so. And so the interest is now rebuilding. And you're correct, the stock has been stronger. But Craig and I would humbly submit to you that we believe, to use your word, optionality. The optionality here is so compelling, and the valuation prospect so meaningfully higher, that I would submit to your listeners that it is absolutely not too late to consider the investment case in Recon Africa because of the value, the back of the envelope numbers that I shared with you earlier in the discussion. The upside potential here is so compelling that Craig and I would submit to your listeners it is definitely not too late.
Well, I would also say, I'd like to say that I think this is a better buy now than it was at 50, 60 cents a few months ago, say pre-financing, because nobody's raised any money in Canada in the oil and gas sector this year. But the fact that we were able to complete this financing, upsize it twice, and fully fund our drilling program, I think that it's much less risky now. It was much greater risk at half the price than it is at twice the price, fully funded, given the state of the the environment right now. So that's just the way I look at it.
Well, gentlemen, contact info if you guys want to share that. Appreciate you taking the time. But if our members want to reach out, how can they do so? What's the best way?
I would commend the website to your listeners, reconafrica.com. There's a tremendous amount of information on the website under both the investor tab and the operations tab. We have a tremendous amount of technical detail. The full Dan Jarvie report is under the operations tab. We've talked about Bill Cathy a couple of times on this call. There's call it an Aeromag Survey 101 primer, Bill Cathy slide deck under the operations tab. Again, if your listeners have questions, would be happy to receive those from them.
Okay, and gentlemen, is there any other thing on the slide deck you guys want to talk about? Any final closing remarks?
I think just the conclusions. I mean, we believe that we have uncovered a new sedimentary basin here. We're going to drill it in the beginning in the fourth quarter. We believe that we are catalyst rich as a result of that. It's a fully funded work program, as Craig emphasized a few minutes ago, Andrew. And we think we have an enormously exciting future. We think that the remainder of 2020 and into 2021 is a period when we will be rich in materially positive news flow. And we believe the share price will react accordingly.
Craig, any comments?
No, I think you pretty well nailed it, Doug. And I'd just like to thank you very much for your interest, Andrew, and all of your subscribers. And it's going to be a wild ride ahead.
Excellent. Well, gentlemen, really appreciate you guys coming on, and we'll leave it at that. And thanks for sharing the information about Recon Africa to our members.
You're welcome.
Thank you very much for the time and interest, Andrew. We appreciate it.